All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today is March 21st, 2025. And a top story this morning, it happened yesterday. We've watched it coming for a while now. A DeathCross in Nvidia stock. If you guys don't know what a DeathCross is, a DeathCross is when the 50-day moving average crosses below the 200-day moving average. And it is a highly dreaded, rather reliable bearish technical indicator, a big-time bearish technical indicator. And Nvidia stock, the company that is holding up the whole freaking financial world right now, just flashed that signal yesterday, just as Jensen Huang was at his little GTC conference talking about how demand is insane and people are going to have to mortgage their children to buy my chips or whatever stupid talking point he's talking about today. And just so you guys can see what's going on, let me throw this up on the screen. There's Jensen, and there's your blue line crossing under your red line. Yep, that's your basic death cross right there. Majorly bearish technical signal. And a fun fact about that death cross, this is very interesting because somebody made a comment like, I thought when Jensen signed that woman's chest last year that was going to mark the top. I think that was meant as a snarky comment. But a fun fact, if you look at the chart where that death cross actually happened yesterday, within just a couple of pennies of the closing price on June 4th, 2024, which was Nvidia's CEO booby signing day. So no, that didn't quite mark the top, but it might be kind of close. So we got all that going on. Now look, this is not a perfect indicator, this death cross. We talked about this earlier in the week as we saw this one coming. There have been 12 death crosses in Nvidia stock since the company first went public. Of those 12, 9 of them were marked by significant declines in the stock, averaging 41% lower from the moment of the decline, which, you know, right now Nvidia is at what, like $116? 41%, that's a lot of percent from here. All right, so that's 9 out of 12 times we have had these significant double-digit declines in Nvidia stock. The other 3, all right, it actually bounced. It bottomed within a few days of the death cross, and Nvidia would, of course, go on to make new all-time highs. So, you know, based on that math, there's like a 3 out of 4 chance that this is the start of a precipitous drop in Nvidia stock. That's not a perfect indicator, but those are odds I wouldn't want to be on the wrong side of. Also, guys, I just got to throw out my disclaimer. I have no position in Nvidia stock. I'm not long. I'm not short. None of these names. But there's a couple of major events that are on the horizon, a couple of big stories going on right now that could precipitate this drop that typically follows a death cross. You've got the Singapore chip scandal, which is ongoing. That is a potentially huge story if the government decides they are going to crack down on those illegal chip sales to China, which you'd have to be deaf, dumb, and blind to believe it's not happening at this point. It's so obvious it's happening. Even these imbecilic stock bros can see that that's happening. The question is, it's a Boolean. Will the government crack down on it? If they do, then Nvidia stock crashes. It's 20% of their revenue. It would crash the stock if that happened. All right, but that's a choice. We don't know if the government is going to decide to do that or not. It looks like they're leaning that way, but that's an open issue there. Also, you've got the CoreWeave IPO, and I cannot stress the importance of this CoreWeave IPO that's coming up right now. It is a measurement of retail investors' appetite for cash-burning AI investments. And if the CoreWeave IPO goes well, Nvidia stock will probably continue to rally from here and not continue to rally. It will probably bounce from here and rally, possibly even make new highs. If the CoreWeave IPO does not go well, it's going to signal to Wall Street that retail investors have no appetite for this crap, and therefore you better stop shoveling money into the furnace of AI infrastructure buildouts because you're not going to be able to dump these bags on unsuspecting investors. And if that CapEx stops flowing, if somebody blinks in this magnificent game of CapEx chicken, then there is no longer any new investment capital flowing into these companies. And look, CoreWeave loses hundreds of millions of dollars. OpenAI loses billions of dollars. As a matter of fact, everybody in this space, besides Nvidia, loses money on their AI investments. Nvidia is all of the profits here. And if CoreWeave doesn't go well, that means people won't keep shoveling money into supporting that endless flywheel of round-tripped revenue. So look, as this DeathCross happens, there's a lot of things that could trigger that big downfall. You got Microsoft is pulling back. You've got the comments about demand is insane. And, obviously people are still shoveling the money into the furnace for now, but that could be about to change. Very much an inflection point here. Now, another Mag 7 name that's making news is Tesla. Yesterday, Tesla announced that they are recalling all CyberTrucks due to a faulty glue that was used to attach one of the panels to the body of the truck. They've been falling off in traffic. And it just goes to show you, Elon is thinking, you can't spray paint swastikas on my trucks, or you can't blow them up if I recall all of them. Yeah, see how that works there? I'm not sure the math really checks out for that, but I guess there's a silver lining to that. You can't blow up the trucks. Look, besides the fact that I hope all of these wannabe commie posers that are blowing up trucks, which are, by the way, mostly owned by Democrats. I don't think they're really thinking about this. Like, most of the people who drive Teslas are not right-wingers. I don't think they really care about this. But look, blowing up somebody else's property, firebombing dealerships is not a form of protest that makes you a violent a-hole. And I hope you rot in a prison cell for it. But besides that, let's recognize the fact here, guys. Tesla is just dead money at this point. All right. Forget your opinion about Elon, love him or hate him. Forget your opinion about whatever these black bloc idiots are that are blowing things up. Half the country is not going to buy a Tesla right now. The other half of the country probably wasn't going to buy a Tesla to begin with. So, look, what does that leave as far as a market goes for Tesla? Tesla will dominate the all-important demographic of Republicans who want to fight climate change and aren't afraid of fire. So they got that going for them. But other than that, this stock is in big trouble, guys. I think we're probably going to see some seriously big declines in Tesla earnings. Maybe they can sharpen their pencils and have their accountants engineer some kind of an adjusted gain. Maybe they can make some kind of ridiculous statement about humanoid robots or Optimus, or I joked the other day, Elon's going to claim he invented time travel and people will buy the stock. I don't know. Maybe they can do that, but their EV business is like just screwed. They're more screwed than screwed. It's bad. It's pretty bad there, guys. And that's a big name. That is a Mag 7 name along with Nvidia. Also going on this morning, you've got Nike stock getting clobbered. They're worried about weakness in the consumer. They're worried about tariffs, and they just reported earnings and guidance. They're guiding for a mid-teens decline in sales over the coming year. Tesla stock getting crushed on that news. Meanwhile, you've got Darden Restaurants, which owns names like Olive Garden and Longhorn Steakhouse, Ruth's Chris. They just actually reported some pretty good numbers. Fairly decent earnings in a very troubled sector. That stock was up yesterday on that news. So the higher or middle higher bracket restaurants doing okay, right? Darden Restaurants, that's slightly more upscale than like a TGI Fridays or an Applebee's, not by all that much, but it is slightly higher scale. They continue to do at least a little bit better than some of the more budget restaurants are doing. Then we got FedEx. Their stock is getting clobbered this morning. They're reporting uncertain demand for parcels and freight. Tariffs obviously playing a big role in that one. So FedEx stock, which is a pretty good barometer of the health of the economy, not looking so well this morning. Heathrow Airport in London is shut down possibly for days here. There was a fire at an electrical substation that took out power to the airport. They have halted all traffic in and out of London. That's a big one, guys. Heathrow is a major transportation hub. So if you are traveling, check your travel plans, because with Heathrow going down, that's going to back up planes and have domino effects at airports all over the world. So double check your travel plans. President Trump is expected to announce a new fighter jet program today. $20 billion contract is going to be awarded. I heard a lot about spending cuts, about cutting defense spending in the Pentagon and the budget cuts. It's hard to do when you have new fighter jet programs rolling out. So, you guys going to cut spending? Maybe you should actually cut spending. Just throw it out there. You guys do what you want with them. And also, speaking of the floor is price discovery, as we've been talking about all week. San Francisco's largest apartment complex was just sent into receivership. The Park Merced apartment complex, which is thousands of units, has defaulted on $1.8 billion in loans. Guys, it's just a reminder that commercial real estate thing, that is still out there. Everybody's pretended it hasn't happened. The floor's price discovery. Oh, we don't want to know what it's actually worth. The answer is a lot less than you're claiming it's worth. They're still not paying their bills, and somehow this still hasn't blown people up. Well, some bank somewhere just lost $1 billion on this deal. Is that going to show up in these earnings and these balance sheets at some point? I don't know. But for now, let's shrink my big melon of a head and let's see what's going on in these markets today. And guys, don't forget that like button or that subscribe button if you're new here, because we do this every day. So come have your coffee with the melon heads. Right now, the S&P 500 is down about 55 points, and something happened around 8:15 a.m. this morning. I don't know what it was. There was no headlines. There was no economic data. But you can see right here, the indexes started heading lower, and they have not stopped. All right, if you guys know what happened at 8:15 Eastern time this morning, drop it in the comments, because Mish and I were looking for it on our phone call. Hard to see what it really was. S&P down 56 points, 1% lower and falling. The Dow, meanwhile, same thing, started at 8:15 a.m., down 362 points, 0.87%. By the way, guys, today is options expiration day. Triple witching, the options expiration in the third month of the quarter, all that stuff that comes along with it. Expect some volatility this afternoon into the closing bell. Dow down 360 points as of now. The NASDAQ down 226 points, 1.18% lower. Once again, a sell-off that really picked up right around 8:15. Looking over at the U.S. dollar, it is a little bit stronger this morning, 103.98, up 15 basis points. It was higher yesterday. That's continuing today. That's going to put a little bit of downward pressure on stocks. And looking over at the bond market, we've got yields mostly lower on the long end, albeit just a little bit. The 30-year Treasury, 4.540. That is down 1.5%. 10-year, 4.203. That's down 3 basis points. The 2-year, 3.921, down 3.5 basis points. And the 1 month is unchanged at 4.291. Looking over at the commodities board, we got a lot of red this morning. Spot gold is down by $9, although still up in the clouds here at $3,035 an ounce, or it's about 0.3% lower this morning. Spot silver is down once again, $33.13. That one's looking pretty bad this morning, 44 cents lower, or 1.3% in the red, but I like the shiny. Copper's off by 0.75%. Platinum is down 1.25%. Palladium is up about 0.9%. And crude oil is down 0.25%, $67.91 for May WTI futures. That's off by about 15 cents this morning. Looking over at the Bitcoin chart, there was some signs of life in Bitcoin yesterday, and well, it was lovely while it lasted. Right back below that 200-day moving average. We popped above it on that modestly dovish Fed on Wednesday, and then yesterday we came right back below. And let's get a little bit closer here. You can even see this morning, guys, on this candle, we just popped our head above the 200-day moving average. It only lasted a couple of minutes. Right back down we went. So again, the technicals on the Bitcoin chart, guys, even though the price is still looking pretty good here in the 80s, this is an ugly, ugly looking chart. This resistance in the 200-day line, something bad is coming in Bitcoin, guys. Be careful. Watch your leverage. All right. Now, as we were talking, guys, the big thing, this technical story, this 50-day moving average crossing below the 200-day moving average, the DeathCross and Nvidia stock. All right. This is an ominous sign. It's not a perfect technical indicator. It's about 3/4 accurate. But let's talk about some things that might affect this. And the CoreWeave IPO, again, I think the most important thing to NVIDIA stock right now, besides NVIDIA's earnings and revenue, is this CoreWeave IPO. I think that's vital for this entire bubble. And we got this one last night in Semaphore. We're getting a little bit more clarity on WTF is going on with Microsoft and OpenAI and CoreWeave. And Semaphore is reporting that Microsoft chose not to exercise $12 billion CoreWeave option. And this helps to fill in the blanks a little bit on what is going on between these companies here. Microsoft chose not to exercise a nearly $12 billion option to buy more data center capacity from CoreWeave. People familiar with the matter said a sign that big tech companies are starting to right-size and tailor their AI budgets. And guys, if you're like a Magnetar Capital, you are terrified at that language. The idea of right-sizing or tailoring their AI budgets should scare the ever-living crap out of these levered-up AI bros right now. CoreWeave, which is readying for the year's most closely watched IPO, quickly found another buyer, though. OpenAI snapped up the contract last week, and Microsoft has reiterated its plans to spend $80 billion on AI. Remember, the phrase is AI infrastructure. That's what Microsoft has been saying. I believe they're going to spend most of that $80 billion on power. Nvidia CEO Jensen Huang told thousands of eager fans at the company's annual conference on Tuesday that the appetite for AI is only growing, and the limiting factor is the raw power needed to run increasingly gargantuan data centers. CoreWeave and Microsoft declined to comment. Now, the Financial Times had reported earlier this month that Microsoft had walked away from some of its commitments, a characterization that CoreWeave disputed. And there's some interesting nuance to the language here because CoreWeave denied that Microsoft had walked away from their commitments. But let's parse the language. Look at that headline again. Microsoft chose not to exercise a $12 billion option. Well, a $12 billion option is not a commitment, is it? And so CoreWeave can come out and they can deny that Microsoft, no, they didn't walk away from any commitments. They just declined a $12 billion option that they never committed to in the first place. It doesn't really change the math for CoreWeave. That's $12 billion of revenue they were banking on that they're not going to get now. And then you've got OpenAI coming in, and I've been posting about this on X for a couple of days. Understand this OpenAI deal to come in and real quick buy up $12 billion worth of data center capacity. That was a purely defensive move by OpenAI because OpenAI needs that CoreWeave IPO to go well just as much as CoreWeave does. You may recall some recent headlines. OpenAI is trying to raise capital at a $350 billion valuation because OpenAI burns money faster than all of them do. Without a capital raise, OpenAI will not survive. They are fully dependent on an endless flow of investor cash. They lose money on every single prompt. You know, it's like that joke. You're like, oh, well, we lose $1 for every unit, but don't worry, we make up for it with volume. Yeah, it doesn't really work that way. So what happens to OpenAI and their attempts to raise capital if the CoreWeave IPO flops, demonstrating to Wall Street that investors have no more appetite for this crap? Well, then CoreWeave can't raise that capital, can they? Or OpenAI can't raise that capital. So this move by OpenAI is about preserving the CoreWeave IPO so that OpenAI has a chance to raise more capital, or at least that is my interpretation of these recent events. This is also indicative of the further divorce going on between Microsoft and OpenAI, and maybe that's too strong a word, but at the very least, they have agreed that they should both see other companies because Microsoft basically signed away their exclusivity agreement with OpenAI. OpenAI, if you need more compute, we're not going to build it. You can go get it from somebody else. And of course, that somebody else that OpenAI went and got it from is CoreWeave, the same company that Microsoft just walked away from a $12 billion option from. You can see this growing rift between OpenAI and Microsoft. Guys, things are not all going swimmingly in the AI sphere right now. And if you time all this stuff with that DeathCross and Nvidia stock, you can start to see a pattern emerging. Watch that CoreWeave IPO. I cannot overstate how important that is. Meanwhile, we've got nearly all Tesla CyberTrucks have been recalled because they used the wrong glue. Don't you just hate when that happens? Tesla says it will fix the sticky issue. I see what you did there, Wired, which could cause panels to detach from trucks while driving with a new adhesive that is not prone to environmental embrittlement. And that's pretty much the story there, guys. They used the wrong glue and the panels fall off, and every single Cybertruck has been recalled. That's going to be an expensive one for Tesla. Tesla stock, it was up a little bit yesterday. It's down about 0.6% today, $234.77. Year to date, Tesla is down 41.5%. Look, I know there's a lot of guys who are like, Tesla is undervalued here, but look, we have not seen any earnings reports since this whole Molotov cocktail thing started. I would not touch this one until I get a little bit of clarity on just how big the decline in Tesla sales is going to be. We know the China numbers are going to be terrible. I'm pretty sure the European numbers are going to be terrible because Tesla's competing against those BYD vehicles over there. And then in the States, they're going to be just dreadful because all the people who have been buying Teslas this whole time are now not buying Teslas because Orange Man bad. That translates into really no prospects, no hope for Tesla's earnings here, but maybe they're going to sell a lot of robots. I don't know. Nike stock, meanwhile, expects sales will plunge in the current quarter as it faces tariffs, sliding consumer confidence. There's that tariff worry. There's that weak consumer again. Nike stock not doing so well here. Nike on Thursday warned that sales will probably drop by double-digit percentage in its current quarter as the sneaker giant contends with new tariffs, sliding consumer confidence, and a slower than expected turnaround. In a conference call with analyst, finance chief Matt Friend says Nike expects its sales decline in the fiscal fourth quarter, which is set to end in May, to be at the low end of the mid-teens range. Can somebody say what the low end of the mid-teens range? Does that mean like 15 to 17%? Is that what we're saying? It also anticipates its gross margin will fall between 4 and 5 percentage points as it ramps up efforts to liquidate excess inventory and stale styles that are no longer resonating with consumers, a process it expects to continue into fiscal 2026. Look, there's a lot of language to be worried about here. Low end of the mid-teens decline in sales, gross margins falling several percentage points, liquidating excess inventory, stale styles. These are not optimistic phrases here, guys. Now, look, Mike, other than that, Nike reported numbers. Let's see. Sales dropped 9% from a year earlier. Like other retailers, they saw strong demand in December, followed by double-digit declines in January and February. Obviously, tariffs are going to play a role here for Nike as well. They delivered a strong earnings beat, but expectations were low heading into the release. Profits fell 32% from the year-ago period. Now, that's a big one there, guys. I mean, with stocks at these valuations, you got to keep in mind, profits are falling. 32% decline in profits. That's not a modest decline. That's not a down year. That is a bludgeoning. I just think this whole market has a date with reality, and it's not going to be pretty. Right now, Nike stock is down 7.5%, trading at $66.44. That's off by about $5.43. Year to date, Nike is only down about 5%. And over the last year, however, it's down about 28.3%. But I would add their earnings are down even more than that. So Nike's this company's in trouble here. Meanwhile, Darden restaurants, their sales disappoint, but the Olive Garden parent sees consumers continuing to spend. Now, keep in mind, this is restaurants. This is a sector with very low expectations to begin with. So even though these numbers weren't great, they were better than feared. Darden restaurants on Thursday reported weaker than expected sales as Olive Garden and Longhorn Steakhouse underperformed projections. The restaurant company blamed weather for the sales slowdown, but maintained its full-year guidance, lifting investors' confidence that the rough quarter was a blip. It's just a gully. Darden shares rose 5% on Thursday. Net sales rose 6.2% to $3.16 billion, fueled largely by addition of Choi's restaurant to its portfolio. So they acquired that growth. Their same-store sales was only up 0.7%. That is below the 1.7% increase that analysts were expecting. So that's not so good there. They are growing, but they're growing much less than the rate of inflation. Executives blamed the winter's low temperature and snowstorms for the disappointing quarter ended February 23rd. That's kind of believable. It was a pretty lousy winter. When excluding weather, same-store sales across all four Darden segments grew during the quarter, and only consumers making less than $50,000 were spending less at its casual dining restaurants. Even if consumers say they're feeling less optimistic, we haven't seen a huge correlation between that and dining out, said CEO Rick Cardenas, who told analysts on the company's conference call. So I think as long as incomes are going up and outpacing inflation, I think they're likely to keep spending. Now, that last comment there, I got to send a shout out to Mike Green on Twitter, who made a really good point recently about incomes going up more than the rate of inflation. That is true to a certain extent, but it's not true elsewhere. Yes, average hourly earnings for the last several months have been rising faster than the rate of inflation. That is true, and it's been a pittance of an outpacing of inflation. So yes, average hourly earnings rising faster than inflation. However, average weekly hours have been declining at the same time. So forget what you're making per hour. What is your paycheck at the end of the week or at the end of the month? Paychecks are smaller because of that cut in the hours. So the whole thing about incomes going up, I don't think that's true. and I don't think that's going to hold for much longer. But for now, Darden Restaurants stock was up about 5.7% yesterday on this news. It's down about 1/3% this morning, trading at $198.40. FedEx, meanwhile, says uncertainty and slowing parcel and freight demand. Look, FedEx, they're worried about tariffs. They're worried about the consumer. You can see the same thing going on in their stock that you saw in Nike here. The stock value dips despite improved Q3 physical and performance. FedEx Corp shares fell more than 5% in aftermarket trading on Thursday after the integrated parcel giant reduced its full-year guidance for the third consecutive quarter because of intensifying macroeconomic headwinds and uncertainty in the U.S. industrial economy, which are crimping higher-margin B2B shipping services. FedEx said it expects revenue to be flat to slightly down year over year from the previous outlook of flat revenue. The estimated range of earnings per share, excluding certain costs, is $18 to $18.60, compared with prior forecasts of $19 to $20. A primary area of uncertainty that could impact FedEx bottom line is the rapid escalation of tariffs and tariff threats from the United States, which is inviting retaliation and worries of diminished consumer demand because of higher import prices. So you got struggling macro headwinds, a struggling consumer to begin with. Tariffs is going to make that even worse. FedEx is warning about it. And right now, FedEx stock, look at this pre-market today, guys, down 10.25% ahead of the opening bell. This is not a small decline in FedEx stock. And again, this is a very good barometer of the overall economy. Year to date, FedEx stock is down 12.5%. It's going to be a lot more than that after today. And going back about a year, it's only down about 5% year over year. FedEx stock also in trouble. Pay attention, all you travelers. Heathrow Airport closure to cause travel and mayhem for days. We still don't know what caused this. There was a fire at a substation near the airport. It cut power to the whole airport. And they're saying it's going to take a couple of days to clear this out. London Heathrow is a major hub. That is going to cause traffic to back up in New York, in Philly, in Newark, in Atlanta. It's going to cause traffic to back up all over Europe. So, guys, just watch your travel plans here. This one is going to create a mess all over the world. We got Trump to award the U.S. Air Force's next generation fighter contract on Friday, sources say. Guys, this is kind of a big one because they were supposed to be canceling this program and they're supposed to be cutting spending. Apparently, neither of which are happening. U.S. President Donald Trump will personally announce the Pentagon's decision on a next-generation fighter jet contract worth at least $20 billion as soon as Friday, despite concerns about budget constraints, shifting priorities, sources briefed on the plan said. The next-generation air dominance program, or the NGAD, will replace Lockheed Martin's F-22 Raptor with a crewed aircraft built to enter combat alongside drones. The plane's design remains a closely held secret, but most would likely include stealthiness, advanced sensors, and cutting-edge engines. Now, here's the thing, guys. The NGAD program has been on life support for the last couple of months here, and this is pretty much out of character. Like, you've had Elon Musk, who has very much got the ear of the president, has been saying manned fighter jets are a thing of the past and drones are the future. And that's kind of the reason why the NGAD program has fallen by the wayside. And there's been rumors that it's going to be canceled because things like the Collaborative Combat Aircraft, or the CCA, which is basically like a drone wingman for an existing fighter, that has been the front runner for the next generation fighter. But it looks like they're dusting off the NGAD program here and not the CCA. This kind of flies in the face of what we've heard out of Washington. Drones are the future, not manned aircraft. And then also the whole thing about cutting defense programs. Well, cutting programs is hard when you're awarding $20 billion contracts for a defense procurement program that surely is going to be way over budget by the time all is said and done. But look for more news about that one later today. And last but not least, San Francisco's largest apartment complex ordered into receivership. The receiver to control the 3,200-unit Park Merced after Maximus's default on a $1.8 billion loan. Park Merced has veered into receivership after Maximus Real Estate Partners defaulted on nearly $1.8 billion in loans secured by the largest apartment complex in San Francisco. The court appointed San Diego-based Douglas Wilson Companies to serve as the receiver for the 152-acre, 3,221-unit complex So that's according to, it's just south of San Francisco State University. San Francisco Business Times has reported 1.8 billion in loans last April. 1.8 billion in loans backed by Park Merced were turned over to special servicing at the request of the landlord, citing high vacancy and a looming loan maturity, which they couldn't pay off. In May, the San Francisco Chronicle reported that dozens of Park Merced tenants' complaints about broken elevators, lack of lighting in public areas, mold and mildew, leaks, car break-ins, rodents, overflowing dumpsters, and squatters taking over vacant units. Oh my, what a lovely place to live. The publication said the landlord may have cut back on security and maintenance, leading to rising crime and blight. Look, guys, this place is a freaking dump. And this landlord is not paying their bills, so the property is being seized by a receiver. They're going to sell it. They're going to pay back as much of the loans as they can, and some other landlord is going to take it over. I don't know what this means for the people living there, but I can tell you somebody is going to lose hundreds of millions of dollars on this deal, because this property is not worth $1.8 billion, not when it's run down and rodent infested. Somebody's going to lose a lot of money here. I don't know who it is. It's a good bet it's going to be somebody's pension. Here's looking at you, CalPERS, the biggest pension program in America, which surely invested in these loans as part of some affordable housing initiative paid for by other people's money. Commercial real estate, that problem never went away. Wall Street wants to pretend it went away just because it hasn't like totally blown up. I guess that means it's good news. No, it's not good news. This is still out there. And, well, price discovery. Sooner or later, there's going to be price discovery. I just want to say thank you very much to Alias Jones. I wonder what his real name is. Thank you, Alias. He says, thoughts on Magic Money Computers, Ari, Musk, and Doge. I believe the Magic Money Computers is referring to this program that Doge recently, or this thing Doge reported. I didn't read the article, but apparently they found payments that have trillions of dollars of payments that have no category code attached to them, which means there's no way of determining what they're even paying for. And of course, because Treasury has a direct line to the Fed and they can issue their own bonds, it's basically a magic money printer, because they can just will money into existence paid for by holders of dollars elsewhere in the economy, i.e. inflation. Look, I don't know the specifics about this story. Anything involving Doge right now, there's so much hyperventilating BS, and like, oh, a federal judge said this, and oh my God, he's literally Hitler. Like, okay, yeah, all that political stupidity. But at the end of the day, our government wastes money on a scale that is just mind-boggling. And somebody has to do something about it. Is Elon Musk the best man for the job? I don't know. Probably not. He's the one person in the freaking world that is trying to cut United States government spending, and everybody hates him for it. Oh, well, boo-hoo. Spending cuts are hard. Austerity sucks. It has to happen, or we're all going to burn. So good luck. That's all I can say. I hope you cut spending. It's going to suck for the people who are dependent on the programs they're cutting. Life sucks. Life is hard. Resources are finance. Guys, we need to cut spending. That's my thoughts on that one. Alias Jones, thank you for supporting the channel. Thank you for being a melonhead. JJ Watt says, I just received my DoorDash Klarna credit score and it rated me 4 out of 5 burritos. I may have more to say about that DoorDash Klarna thing. There was a lot of people were making jokes on X and Twitter yesterday on this story, saying like, oh, I can't wait till they take loans securitized by somebody's lunch and package them up into asset-backed securities and sell them to pension funds. Yo, you guys realize they're already doing that, right? I mean, I tried to warn people about that on this channel. I made a couple of videos about Affirm last year and the shady Cross River and Celtic Bank that they're doing business with, and they're doing exactly that. They've been doing it for years. And Klarna themselves actually just cut a $30 billion deal with Elliott Management a couple of months ago in order to free up capital for their IPO. They're calling them significant risk transfers. In other words, they're packaging all that crap into bonds and selling them to your pension. It's already happening. So I guess the takeaway is it's funny because it's true. Good luck, though. I'm sure that's going to go very well. Klarna IPO, that's the second big one behind the CoreWeave IPO. A lot of eyes on that one. Thank you, JJ Watt, for supporting the channel. Charles G says, I'm not sure if you use Twitter. I do. At JG_nuke is my Twitter handle. By the way, you'll see that in the if you guys are on YouTube, and the About Me page on my channel has my Twitter feed. But sent you something on back floating rate loans with variable rates for private equity. Sounds worse than OA. Oh, all right, Chuck. I'm going to have to check that one out. I'll be honest with you. Back floating rate loans, don't know what that means off the top of my head. Variable rates, big red flag there. Private equity, big red flag there. Those guys turn everything they touch into garbage. I will look for that one. Sounds like it is in my Twitter inbox. By the way, guys, I try to read all my messages. I just can't do it. I could spend all day reading messages and not get to all of them. So if you send me an email or you send me links and you don't get a response, please don't take it personally. I try to get to as many of these as I can. Thank you, Charles, for supporting the channel. Uncle Fedster says, happy Friday, Jack. I'm looking for Tesla to crash to bargain levels. Look, I haven't looked at the market cap since this big decline that's happened over the last couple of days. But I can tell you Tesla was previously valued more than Ford, GM, Chrysler, and like all the other automakers combined. Bargain levels for Tesla are a hell of a lot lower than they are here. All right, because you've got, number one, a ridiculous multiple that Tesla trades at because AI, because Optimus robots, because full self-drive, whatever, all these things that are just over the horizon, right, that are going to drive Tesla's earnings through the roof. If that growth doesn't materialize, or if that growth doesn't matter because nobody's buying Teslas anymore because politics, then not only is Tesla's earnings going to fall, but the multiple of those earnings that Tesla trades at is going to fall. So bargain levels for Tesla, you can't look at what the stock was trading at a month ago or 3 months ago as bargain levels, because something like this has never happened to Tesla before. So just be careful dip buying Tesla. Maybe it catches a bounce. Maybe you can swing trade that day to day and make some money off of it. But I think for now, Tesla is just dead money. And I can't understate that. Half the country ain't going to buy them, and it's the half that's been buying them all along. The other half doesn't care about the climate, and nobody wants to buy a car that is statistically very likely to be vandalized. I don't know how Tesla bounces back from this one. I really don't. And, it's not like Tesla can just be like, oh, the board of directors got together, held a vote, and they're kicking Elon Musk out. Without Elon's personality at the head of Tesla, that stock is toast anyway. So I don't see an out here. Maybe they're able to pull this off. Elon has done some amazing things. The guy can catch a skyscraper falling from space, all right? He's done some amazing things. I don't know if he can beat this one, though. That's a big one. Thank you, Uncle Fester, for supporting the channel. Viv B, thank you so much for gifting 5 Nobody Special Finance memberships. Thank you so much for supporting the channel, Viv. I appreciate that very much. Guys, if you received one of those memberships, say thank you to Viv. That was very nice of her. And welcome to the Melonheads, everybody. T.A. Chapman says, I know you've been talking about CoreWeave for a while, but what of these quantum computing companies like Qubits, all these other names, 4 others, and they feel vastly too complicated for me to understand. I don't understand quantum computing either. Apparently the laws of physics do not apply to quantum computing, and therefore they can do amazing things. All I can tell you is quantum computing right now is the front runner for the next shiny new thing that Silicon Valley uses to sell people stock. All right. Quantum computing is not going to be commercialized anytime in the next 10 years. And when you've got publicly traded quantum computing companies, be careful of the claims that they're making. That's all I can tell you. I'm not that well researched in quantum computing specifically, so I can't articulate or comment with any kind of authority on the technology. But I know Silicon Valley. I know it's full of grifters, and I know these a-holes are always looking for the next thing that is just out of reach that they can sell to people, and it usually doesn't go well for the first few names. All right, and AI right now it's AI. Before that, it was Internet of Things, or before that, it was crypto, or before that, it was metaverse, or before that, it was virtual reality, right? There's always this shiny new thing that Silicon Valley hucksters are selling to people. Right now, it's AI. Quantum computing is the front runner for the next generation of that. Be careful. This is where money goes to die. Thank you, T.A. Chapman, for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. Guys, I appreciate the super chats and the generosity. Thank you so much, as well as you, my magnanimous Melonheads on Patreon and YouTube. Looking forward to talking to you guys at 2 p.m. Eastern time for our weekly get-together at Zoom. I will be sending that link out momentarily. Links down below should you feel so inclined. Don't forget that like button and that subscribe button for the algorithm. Grandpa, thank you so much for dropping those 10 memberships on the way out. You, sir, are a gentleman and a scholar, as well as very sneaky. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small. and dream big.